Hello and welcome. You're watching Business Today Television. I'm Tanya Aneja and this is a brand new episode of Technical Gupshup, a show where we'll discuss the technical market outlook, key levels to watch out for and some technical stock ideas that you can bet on at this point in time. Well, we are seeing a tug of war between the bulls and bears. Indian markets are volatile amid negative cues from the global markets. There are clear signals that the Fed may go for further rate hikes, but the good news is that the market has been bouncing back from the dips consistently. Now, experts believe that it's purely the domestic, fundamentals that are working for the Indian markets, and these factors actually worked in Wednesday's trading session as well, and in fact drove the Sensex to a new lifetime high. So now it is important to understand that where are the markets headed going forward, which are the important levels to watch out for, and which are the stocks that you can bet on at this point in time. So to discuss this and much more, let's welcome our guest on the show today. We have with us Mr. Rahul Ghose, who is the founder and CEO at Hedged, which is basically an algo-powered advisory platform. Thank you so much, Rahul, for taking the time out and joining us here on Business Today Television. And if you look at the markets right now, markets are volatile, and if you look at the Sensex, it's down around 180 points at this point in time, and Nifty was able to reclaim that 18,800 mark, and it is still trading at around that particular mark only. But what do the technical charts now suggest for the Indian markets? I mean, where are the markets headed if you talk about near term?
Good afternoon, Tanya, and thank you for having me. So firstly, it's very important to understand that until 18,400 is broken on the index, all dips should be bought. That is, at the outset, I just want to mention that until 18,400 is broken on the index, all dips should be bought. The current all-time high level, which is around 18,880, approximately around there, this is the third or the fourth time we are going maybe 2 points or 1 point close to it and then turning around, or going maybe very close to it and turning around. The next time we go close to this level, it will get taken out, because if you notice 3 or 4 times, it's already gone, and the resistance which is currently at that level, because it's at all-time high, should get taken out when once more we try and breach that level. Having said that, if we go to the bank index, Bank Nifty index is slightly more contrary. It is in a sideways trend and not in an uptrend. And until 44,200, that the level to watch out is 44,200 gets taken out on the upside. You will see all rallies getting sold into. You will see that seesaw movement happening. Bank Nifty actually had a head and shoulder pattern on the daily chart, which got confirmed. And until 44,200 gets taken out, unfortunately, this head and shoulder pattern does not get negated. So 44,200 on Bank Nifty and 18,400 on Nifty are the levels to watch out.
Okay, absolutely. So 18,400, that is the level you should watch out for. And also, if we talk about IT sector, Rahul, the market is not really clear in terms of, how the growth is going to pan out going forward. And IT stocks are also, once again witnessing pressure. So is this the start of another round of, fresh delivery-based selling, or it is like just another round of readjustment which the IT sector has been going through globally?
So on the contrary, I would rather stick my neck out and say that some stocks are actually coming out of the woods when it comes to the IT sector. Names like HCL Tech, Persistent of course has been doing very well. HCL Tech has recently broke out. So for the short to medium term, HCL Tech is also looking good on the charts. But I feel this is the first leg for IT to come out of its bear market. It's been in a bear market, let's not make any mistake, for quite some time now. This is the first leg forward towards coming out of this bear market. Now, it has had a rally from the lows, if you notice, most of the stocks, which people are seeing profit booking. The IT index is seeing some profit booking. I would still say that the steam on the upside in the IT index is left, but although in stock specific names, like I mentioned.
Okay, stock specific is the word coming in, and basically Nifty IT down around 0.5% in today's trading session. But also, let's talk about new age tech companies as well. Experts believe that the worst seems to be over for these companies as they, continue to rally on the back of positive sentiment, especially in the broader equity market. And there is this stock specific action that is happening. So your thoughts on companies like Paytm, Zomato, Delivery, Nykaa? Do you like some names, or one should stay away from this
The,
particular
the
pact?
most the most preferred name out of the four you mentioned was is Paytm. This stock,
Okay.
after a very long consolidation, has finally broken out. So this consolidation started in March of 2022, so
Right.
more than a year back. And after this consolidation, it is finally looking to break out. The last big resistance it had was around 835, 840, which I think last week it took out, and it is in an upward trajectory. The business model of the company also, if you notice, is changing towards profitability rather than only growth. So all these factors taken into account, we like Paytm the best. So users, both your viewers and people who are in it for the slightly longer term, can look at this. Just one level to keep in mind with respect to Paytm: if prices go below 815, then we would suggest exiting. So 815 is the line in the sand that they should watch out for.
Okay, 815 is the level one should really watch out for. And Rahul, also let's discuss Adani Group companies as well. I mean, the shares have had a roller coaster ride in the last 3-4 months, and some stocks have recovered, but some are still struggling. So look at Adani Enterprises, Adani Power, Adani Ports. So are you tracking these companies, and any stocks that you like from Adani space?
So only one stock from the Adani space I like, which is that of Adani Ports. Now,
Okay.
for a very long time, the best way to play Adani stocks was you buy long stranders. That is, you buy options positions of both buying the call and buying the put. And any month you would do this, this would yield a return. For the last couple of months, that trade can no longer be done because they have finally started moving sideways. They started behaving like normal stocks. In that, for equity per se, we like Adani Ports, but Adani Ports, we won't initiate a buy immediately. The current market price is around 747. We would initiate a buy above 761. I repeat, we would initiate a buy above 761. And the stop loss, unfortunately, would be slightly on the higher side because of the volatile nature of Adani counters. But if somebody has a short to medium term view, that even a 6, 8, 10 months view, Adani Ports looks to be a strong counter. In fact, this was one of the stocks which started rallying the first. It was more stable also when all the Adani stocks were going haywire a couple of months back. So, from a fundamental point of view and also from a technical point of view, our pick would be in Adani Ports.
Okay, Adani Ports, that's the word coming in, so keep an eye on that. And before we come to the top technical stock ideas, Rahul, any particular sector that you like? Because, we are seeing this stock specific action, broader markets have been performing really well. So, any particular sector that you like and, that can actually give good amount of return in the near term?
So it's interesting you should ask that, because the entire high that the Sensex had, or Nifty being close to its highs, has only come about because of the beautiful sector rotation happening for the last year.
Right.
If you look right in the beginning, banking stocks were rallying. Then you
Yeah.
had some heavyweights like L&T, FMCG, Reliance that rallied, Titan also rallied. And in the last leg, you saw autos starting to rally, and now cement is starting to rally. Cement per se is a sector that I feel will continue to rally even going forward. We like even the realty pack and the auto sector as well. Auto is slightly overstretched, so auto less, but realty and cement are two sectors which we feel will do well even in the time to come.
Okay, cement and realty sector, that's the word coming in, so keep an eye on that. And now let's come to the top technical stock ideas. So, which are the stocks that you're betting on today?
So, three stock ideas that I would suggest. One is Asian Paints. The whole fall in crude prices has paved well for this stock. It is broken out from a demand zone. It is forming higher highs, higher lows. We can go long at current market price. The stop loss can be 3195 and a target of 3390. The second one is Arvind. Again, stellar uptrend in this stock. Even today, it's doing exceedingly well. You can
Right.
appreciate a long at 135 with a stop loss at 129 and a target of 141 and a second target of 148. And the third name that I would suggest would be on JK Cement. Like I just mentioned, that the cement pack I consider, or we're expecting it to do well even in the future. JK Cement can be bought at current market price with a stop loss at 32.90 and a target of 34.98.
Okay, absolutely. And in fact, Arvind is up over 5% today. So good move coming in on this particular counter. But yes, okay, Asian Paints, Arvind and JK Cement, these are the top 3 picks that are coming in. And on that wonderful note, thank you so much, Rahul, for sharing these wonderful picks and all these, wonderful insights with us. Thank you so much for being with us here on Business Today Television.
Pleasure. Thank you.
So with that, let's wrap up this edition of Technical Gupshup. But don't forget to follow us on our social media platforms like Facebook, Twitter, LinkedIn and Instagram. And stay tuned for all the latest market updates, and many thanks for watching.